So what you're saying is that, like, is there a way to tell on that graph at what point were the hedge funds shorting the stock? So if I'm understanding correctly, it actually benefited them that essentially people started liquidating their at some point they were in a bad position, but it sounds like at some point, because the stock started going down, they actually benefited from the initial shorting that they were doing.
Yeah, and then that's how so they benefited from people starting to liquidate, and they benefited from Robinhood restricting their users of buying more shares, so that their only position was that they had to liquidate, right? So when you're shorting, you're betting that the stock is going to go down. The only thing that's going to drive that stock to go down is the liquidation of those shares. So you can't see when somebody is shorting. You can just see the chart and what's happening. It could be somebody selling, or somebody taking a short position. But ultimately, since Robinhood restricted people from being able to buy, and that their only option was essentially to sell, it drove that price down immensely and started a panic. And then thus, yes, that is where the hedge funds were able to make money, because their short position and their initial hypothesis that the stock would drive down ended up coming back, and they were able to recover some of those initial losses that they had. And that's where this whole conspiracy thing is coming up, with Robinhood having, being in cahoots with some of these hedge funds that had an initial short position. But this initial short position happened, at the beginning of time. Like, I think Citadel, to look at my data here, Citadel in specific, had their short, months ago. It wasn't even. This all became like a perfect storm again, as I said, because you had the people from Wall Street Bets, and then with Robinhood restricting. Now, if Robinhood was able to cover the funding, this would not be the chart that we see. We would not see it so